Hey everybody, welcome back. Well, you can see we made another all-time high right here. Now, this is the ES S&P 500. We have the Fed minutes to go over. We have the economic data that came out. We have what happened on that economic data, which is significantly important to watch. And on top of that, we're diversifying out. We're going to talk about where we're diversifying out and why that's so significant. But to start with, we should probably talk about the Fed minutes as well. I think we should start there. We can all see this flag. We can all see the breakout. And we can all see the push. So we're not going to be adding a tremendous amount of value by saying, look here, look, we're going higher. I would say this. I would say that this was pretty telling yesterday. When you have these wicks at the bottom, and we'll zoom in on this for a second so you can note this yourself. You have these wicks down here, and we know that wicks are price rejection. Then you lift, you get over the doji. Dojis are signs of uncertainty. They make decision points. Then you flipped, closed at the high, and now you're above all these wicks, which means these sellers are now gone. Now, if we drop this down to a 5-minute chart, we will note the same thing that we've been pointing at for some time. We've noted when this blackout period started, meaning corporate buybacks. Corporate buybacks are a huge part of the market, and they cease to exist right around the 14th because they go through what is called a blackout period. Now, this level and right at that range when you came in on Monday, you can see we've really been in the same trading range ever since. And then on Friday at the end, well, maybe we're going to go higher, maybe we're not. But at the time of recording this, we just don't know. What we know now on Wednesday with the half day, this is where we're at. And we did have some economic data today that was important. But I think the Fed minutes are more important to cover this. So then you can see the reaction. We have the Fed minutes, then we'll go to the econ, and then we'll get into what moved and what it looks like where we're setting up for on Friday. Now, before I put this out, I wanted to go through the Fed minutes and just see what was out there. And a couple things I just tweeted as well that I thought were interesting. The key words were disinflation process. There were two big takeaways that I thought were pretty fascinating. Participants observed that longer-term inflation expectations had remained well anchored and viewed that this anchoring is underpinning the disinflation process. So this is a process, and they are understanding that we are going through disinflation and that it's going to take time. This is really important, especially with what we saw today. And it does mean that they're probably pretty tuned in because we saw some of this disinflation today. I'll show you in a bit. Participants affirmed that the additional favorable data were required to give them greater confidence that inflation was moving sustainably towards 2%. I would suggest that you got some of that data today. I know people look at the PCE and CPI, but there's other data that they look at as well. One of those data points was today, and we will address it. Now, one of the things the Fed is doing is taking a playbook from all the earnings calls. They start saying AI throughout the Fed minutes. Participants highlighted a variety of factors that were likely to help attribute to continued disinflation in the period ahead. The factors included easing of demand. Okay, well, that's not great. Supply pressures would be great in product and labor markets. Lagged effects on wages and prices of past monetary pricing, the delayed of response measured shelter prices to rental market developments. The prospect of supply side improvements. The later prospect included the possibility of a boost to productivity associated with businesses' deployment of artificial intelligence related technology. So this is really important to me, and I'll explain why. I get asked all the time, do you just day trade or do you just do short-term trade? 25% to 35% of what I do may be day trading. The majority of what I do is swing or long-term or special situations. I'm really thematic based. And again, doing this for 25 years, I'm always looking for patterns. There's a pattern that I've seen develop, and I think it's continuing from before. That pattern's pretty powerful, and I think we're starting to begin to see the signs of it. I think that's where the market's going with this. I think, obviously, that the minutes are leaked. I'm always that tinfoil hat guy. But I've been saying this for some time, that you are going through a period of increased productivity based upon AI. Now, people are going to say, oh, okay, well, yeah, great. Thanks, Rocky. But there's only been one time in about 40 years that you've gone through this. And what I'm talking about is you have a boost of productivity where you have this boost, and at the same time you're getting this boost, you get a cut. They cut rates. Okay, so here you go. You're going to cut rates. And then as you're cutting rates, productivity is boosting. The only time that I've been trading where this happened was it started in February 1995, and it started with Greenspan. And it was the internet, and everybody needed a web page, and it was going to change everything. And nobody believed it, couldn't figure out how they were going to monetize it. I mean, it's literally like we're in a simulation when I'm watching this play out right now. I hate to put the tinfoil hat stuff on, But this is really important. I'm going to get into this on Saturday so that you can see some of the parallels. Because to me, as someone likes to say, they're absolutely glaring. Now we're going to talk about the rotation. And we are seeing a rotation, and then we're seeing the breadth expand and contract, and we'll get into it. But one of the things that we talked about yesterday was Tesla, and I want to talk about the follow through. Now, if you watched last night's video, we came in, we had calls, we were long stock, we traded up, we did very well, actually sold some pre-market, sold the calls that I held overnight, did very well with those, sold, let it set back up, and then make sure it's going to hold. And the reason I always do that in this environment is just because you're trading very clean, right? It's very clean, but on very light volume on days like today. You don't see a ton of commitment today. Today was a little bit different. We saw the flag and we bought the breakout of the flag. I'm just going to show the timestamps. I'm going to show all the recordings this Saturday. There were so many trades that we did in this, and there were so many reasons why we got out, when we got out, why we got in, when we got in. There were a lot of trades, not only from overnight that carried that did exceptionally well, but also there was just tons of opportunity throughout the day. And with the skew changing that we've gone over a couple times here, if you're trading, then trade. If you're going to hold, then hold. But with the way the skew's changing in this market, you're getting a lot of opportunity to get in and out of these names and constantly be pulling money in while maintaining a core position. You might want to listen to that again. So these were things that we were able to get back in, add to positions, pull an extra $3, $5 on the stock, and then we bought some 250 calls for next week. I paid $6 in a very short period of time. I was in the money. Once we saw the reversal, we just got out of the way. I'll show you that now, but I always like to show the timestamps and then the live trading when I point this stuff out. And I'm showing this one for a reason, but we'll get to that. If you see this, and because you will see this, but you can see real clear here that they're just doing the old stair step, right? The old up, down, retest, and then you're holding supports. Test support, breaks out, fake retest, up again, backfill, test, retest, goes. But then you get this change right up here, don't you? And you can see it up, this bar completely encompasses here. You get a doji, you pop over the doji, you break the doji. That's pretty much it. Now, what's so beautiful about these levels, like when you mark these off, let's just drop that right there. Once you get those, they are significant places to watch. And watch what happened at the end of the day. Hits it, pulls back, hits it. Now you're over it, but you never got over that level at all during the day. But this presented, again, great opportunity for us to get in and out of the name. And this is really important. I'll go over one of them. But what you saw a lot of was this. Let's shrink this down for a second. You see these resistance points, the tests, and then those levels become levels of interest, right? So you have the failed run, and then you fail. You're no longer able to hold this. So then support becomes what? Resistance, and then you break. You retest the level, you attempt it. You can tell by the way that this is holding in here that you're starting to set up. I'm going to get into this in greater detail because there's so many lessons in today's trading. It was crazy. And then you pop over this bar. Once you're over that bar and you finally cleared that and you do the retest, you know you're pretty much golden. I think you know you're pretty much golden, but again, it depends on trading style. So you're buying this bar, and then this is what I'm doing, and then I'm just scaling into positive slippage. That's a really important part of what's going on right now. So when someone looks at this and says, oh, okay, I could have just bought here and then just held. Yeah, you could have. But I came in, closed a bunch of calls, closed a bunch of stock, came back in, let it set up again, bought more, and then I'm scaling out all the way up here, letting it drop back down and going here. And here's the important part that I want people to get by this. When you trade, you have to define what you're doing. I'm going to go off on the tangent now, and then we'll really do it on Saturday. But you need to understand this, and I'll fast forward because there's some stuff I want to cover. So at this stage in the trade, you have no idea what's going to happen. You might say, oh, it's going to keep going higher, but you really don't know that. You don't know how PMI was going to come out. You can see how it's setting up right there, right? And then all of a sudden, you're at that high. Do you know that that's the high? You don't have a clue. Nobody does, right? You think it's the high, but you really don't know. So you have these opportunities when you're trading. And then when you start seeing these setups, you take them. They either work or they don't work. And this one, obviously, in this case, it worked out very well. But if you're in this kind of environment and you're just going to hold this the entire time and what we refer to as white knuckle it, that's not a strategy. That's called a prayer, a hope, a dream. That's not you're not going to replicate that. You need to be able to do something over and over and over again. And a great example of that is this. With Dell today, what if you just held Dell on the breakout because they had great news today and you waited? Or you bought Dell when it came back to the gap fill and then you didn't have a stop. Then your entire day is just nonsense while other names are moving, right? You need a game plan. Let's get back to why Tesla. So the one thing that we're seeing, let's clean all this up, is we're starting to see rotation back into broader names, but this is becoming more of an energy story. Take a look at their energy capacity, this mega pack that they're selling. And what's kind of fascinating to me is they're really hammering this home. Now, there is some validity to it because you do have the highest gross margin business of theirs, but this is the highest you've been off this DTL for some time. You can see the DTL downward trend line. You have not flipped this in 3 years. Now, if you overlay this with volume, you'll see massive volume yesterday. A matter of fact, I think when we did this yesterday, we realized it was one of the top 10 in the past 5 years. It's a lot of volume. And that's on a break, and that's a break out of a DTL. There's really no other way to look at that. You had your follow through today, and you even closed at the high. You're going to see that chase to get into this, and that's just the way it is. For how long does it last? Who knows? But this movement is very different than what rotation continued with Apple. And I was surprised how Apple acted off the open. And quite frankly, I shouldn't be, because these days are always light volume. You know, Friday is going to be a light volume day, and we do need to go through this econ data, but we are on a roll here, so let's stay with it. You're breaking out of this flag, however you see it. There's a flag there. And I think this is really important because go and take a look today on how many times XLK hit new highs on the day. It was just outright buying all day. I'm going to address why I think that you saw this and how they set this up. But most important, XLK is being bought. Microsoft is being bought. These are the same names. We've been talking about the IGV trade. You can see how that's playing out on this huge cup and handle. Let's just zone in on that. And I'm going to leave that in there for now. So these things are developing. They are working. And now what is happening is you are broadening out into other names. For only so much time are people going to want to be left out when they know that you're going to cut rates. It is becoming abundantly clear that that's where we're going. That's why you saw something like NVIDIA hit 600 new highs today. Is it because of Pelosi? No, that might have been how it got on people's radar, but it was really institutional buying. I'll show you in a moment. If you take a look at something like a Tesla, and then you start looking at something like the IGVs, and then you start seeing the diversification through Adobe, and you start seeing that they are looking for other names. I've been talking about this one for days. I think we're up about $20 in it now. And this is what's always so fascinating to me when people are like, oh, you just day trade. I haven't done a thing with this. Literally nothing. I bought it, left it alone. Same with Microsoft, zero. And what's so fascinating about this market is they are broadening out into other beaten down tech. So if you go and take a look at cloud, for example, you're seeing that continue to push. Now you have a little bit of a rejection here, and how long that lasts, we'll see. But what are they selling? And I thought this was kind of interesting. They're selling biotech. And then you have to think about, well, why would you sell biotech? Well, that's because they're worried about rates. Well, if they're worried about rates, why are they starting to pick up the solar names? And I think this is where they're going next. I'll cover it more on Saturday, but if they're going to go after Tesla, and they're going to say Tesla, renewable energy, energy stabilization, and that's where they're going with this business, and that, everyone's going to have like a robo-taxi and a special robot around the house, whatever. But the real money for me is if they can get that energy, if they can get that to work and they can show, hey, by the way, this is how we're going to tie it into data centers. I think that there's a real story here. And I think there's a real opportunity for Tesla, quite frankly, because I don't know who else is doing this that would possibly compete with them. You are seeing that money rotate into this, and we did see this today on the pullbacks. Now, there were two critical pieces of information today from my perspective. You have the ADP employment change, which the actual was 150. The previous was 157. And the consensus was 160, the forecast 100. Now, all this means is that the ADP itself, that's their data. Their data is an average of 30 employees, and they only do their payrolls. But this is really small business, and they're not seeing a huge change. Matter of fact, they're actually lower, which bodes well for non-farm payrolls on Friday. I was going to say Thursday, but obviously we're off. Now, why is this important? Because that's a telltale sign that the economy might be getting weaker and the labor market might be getting a little weaker. But you need to see the non-farm payrolls on Friday. During the day, the FOMC minutes were not out, which is why I wanted to wait to record this until they were. But the biggest thing for me was this. Services. ISM Services PMI. You were looking for 48.8 is what came out. Consensus 52.5. You went from 53.8 to 48.8. Is that a big drop? Yes, it is a big drop. And I'm going to explain just how you should look at ISM. ISM is compartmentalized of two groups. And the group that's actually falling by the wayside is manufacturing. Manufacturing's been dropping and services have been going up. Manufacturing is not where it's at. People don't want to spend their money on that PMI, Purchasing Managers Index. They're spending their money on services. They're not spending it on manufacturing. ISM combined is services and manufacturing combined. And that combined gets that ISM number. This is just services, which has been the hot part of the market. So that's why you're going to see this, and we'll get into it again on Saturday, looking at what it did to the rate drops, but they dropped precipitously today. You flipped to, I think it's something around 65 or 70% chance of a cut. And you would look at this and go, well, just this little guy doing that, did that? When you understand what this really is telling you. So what this demarcation line, it's all about 50, everything. And what this means is above 50 is expansion, below 50 is contraction. And what you're saying is you've had one reading right here that was below 50. And then you had this number that came out that was through the roof. And now you have the lowest number you have in a year. But how bad is this number? Let me just put it in perspective for you when you look at this. Okay, you're looking at a year, but let's take a perspective look. Now in front of you is line form because it's easier to see that way. And I just want to point out a couple things and then we'll get to it. This right here is 49 and change. This is lower. And you can see the trajectory of it. I mean, I'm not adding a ton there. But from this point on, that's lower, just FYI. It's 49 and you're at 48.8. So you'd have to go to the pandemic to find a reading like this, where they literally shut down the world. But it's actually even stronger than that. This is 10 years. And if we mark from this peak over and you come across, the only other time you've been here in 10 years is the pandemic. This has you going back all the way to 95, and that's as far back maxed as it would go. And just again, to put this in perspective, just look at what other events took place here during this period of time. You need the great financial crisis, you need a pandemic, or you have the correction that happened here. This is actually when we went into Iraq. And you have the correction here. Now, this falls into exactly what we just talked about. We're going through it with the FOMC minutes. It's why I wanted them. You're going into a deflation environment and productivity is going to increase. This is telling you that they're going to cut rates. Now, when this starts to drop, it just doesn't kind of do this. We have like a little stair step. That's not how this goes. That's not how any of this works. It's vicious. Now, it's not going to be we're stopping the world vicious, but it's vicious. If you look here or any of these other times, this is what you're dealing with. My one concern, frankly, is how fast this is going to happen. Because if it's too deflationary, you could get an 01 situation before you see a bounce. I don't know that that's what's going to happen, but you could get that. You could have some kind of flush and going, whoa, this is way worse than we think it is. But going forward, all we're trying to do is get through to Friday, and then we'll get more into this on the week. Anybody that looked at that data this week and understood data moved. Now, there is subjective data, and there's obviously what you think is going to happen. I would refer to that as subjective data. You're creating what you think is going to happen. And then there's objective data, what actually happens. So here we are again, marking a key level in a bar. Do you think that was a good place to mark off when that data came out? This is why I hammered that stool home. Now, I've gotten a lot of great comments about my stool, so I'm bringing it back out. Again, this is us trading up here. And sometimes when you're sitting at a bar, you'll lean a little bit on the first leg or the second leg. Sometimes you're leaning sideways. But this is the macro leg, this is the fundamental leg, and this is the technical leg of the market. I really like this stool. And what you'll note about this is if you're missing out on macro, so you're fighting for inches. But if you're just looking at technicals and thinking, oh, today's no big deal, then you just missed a massive move, not only in the bond market, but you don't even understand what happened here. Why everybody else is going, oh, well, the technicals and blah, 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 and light trading. You're like, oh, ISM came in, ISM is weak. They're going to buy equities, they're going to buy bonds, they're going to go buy high beta, they're going to go diversify back into tech. Now, if you knew that, from this time point on, take a look at what that would have done for you. Now, I think it's important that not only do I show you what moved the market, but I think it's important that you understand why you should care. Now, if I mark that 10 o'clock bar, which is marked right here, and I did it from the Qs over because the Qs moved before the SPY. That's something else you can do. You can line up all the indexes and see which one moves first, and then drill into the indexes and get even more edge. But if we mark that level, and I took Tesla out because Tesla had news, but I can overlay Tesla with this too, and you'll see something similar, but it peaked earlier and then rallied at the end. From this point on, it was just go time. Everything lifted. Everything lifted, and they all started to lift right around the same time. Now, if you are to look at what time they all started to lift, it's when you flip that 1 minute bar. Once the NASDAQ starts flipping that 1 minute bar that we marked off here, once that happens, all of these names lift. And then it just becomes a question of which one's going to go first. Did NVIDIA rally that much because Nancy Pelosi bought some calls? It might have brought it to some people's attentions, but institutions don't care. Institutions are looking for key levels. And I'm going to show you exactly what an institution was looking at today. They were looking at the same level I've been pointing at all week. And if you used it, you did exceptionally well. It's another trade I want to walk through, but we're not going to do it today. We'll do it maybe next week. But there's literally a whole lesson there on pain points. But look at the difference in what this market looked like. From that point on, once you flipped, it was on. And people have no idea why. But if you understood what that data was significant, then you moved up the ladder. And that's what's important. Now, what I mean by up the ladder is this. You could see that this was marked here technically. You would understand why that happened. You would know to look for that data. If someone's not knowing to look for that data, then they're on this rung of a ladder. And you would think of a ladder as who's got edge, and edge is information, right? I always say to people in the community all the time, like, what edge do you have that somebody else doesn't have? And they could be like, well, we know this. Okay, well, now we have an edge. And what you're looking for is that the majority of people that were trading today, they have no idea that they were even supposed to look at that data point. So you just knowing to look at that data point is good. Then understanding what that data point's going to do, if it's good or bad to the market, takes you up another level. Understanding the significance of that data point when it has an outlier, another level. Understanding the significance of that data point and what names are going to move if it goes that way is another. And up the rung you go until you're like, oh, PMI, services PMI is weak, just go high beta. High beta will rally. And high beta are tech names. Beta means how they're tied to the market. And that's why the NASDAQ outperformed the way that it did today. That was the key driver. Now, as far as NVIDIA, the thing about NVIDIA that you have to look at, and this is the chart that I actually put this in the room, and I'm not going to do another timestamp for time's sake, but we bought here. Now, why? Well, we've been going over pain points in these videos now for about a week with everybody since they started and said, mark off the pain points and watch them. Anchored VWAP is a great tool, but anchored VWAP, you could put them anywhere and then say C. I could draw 20 anchored VWAPs and then go see it hit this level. You need areas of pain, and there's good pain and there's bad pain of areas, meaning FOMO or where people are trying to get out. This is where people were trying to get out. You had a tremendous amount of short sellers in here, here, and here. I bought here, made a little money, sold into this one, bought this one, lost money. But I know the area of demarcation. And understanding that, you could make money because when it did this, it was a great place to buy puts. But today, when you started to rally, you started to get a different look about it. And you can see that look. And I'm not making up these levels. You literally can go drop that VWAP level yourself and see the battle. Up, over, test. You could see the support here. Up, after the test, what do you get? Retest, goes. And that's all you needed. I'm not going to get into it all, but once that happened, it was on. It was very obvious that you had a really high probability of lifting here. And that's exactly what happened. It provided an excellent opportunity. Now, I think that this is really important. A lot of people will go, oh, well, you moved because of Pelosi. You just happened to move today because of that? No. You moved because they put money to work. If you go and take a look at this and you go and look at the stocks and everything else, you'll see why. It doesn't mean that this was going to get through, but using that area of demarcation provided great value, because what will happen going forward if I clean all this off, people will look at this bar and now they'll see a Marbuzu white, which is a great pattern, but they won't understand how it got there or why it got there. They won't understand the significance of the bar. And now if you watch this video, you understand the significance of it. That's it.